What's going on, money lovers? Welcome back. So people often ask me what marijuana company that I invest in or which one that I like the most. The answer is none of them. Instead, if you really want to get into the marijuana industry, I really like the company Altria, because what you get with Altria, ticker symbol MO, is a sound business model. So if we take a look at Altria's stock chart here, you see that it hasn't quite recovered since its pre-pandemic levels. It still has about 20% upside, but what really excites me here more so is this starting dividend yield of over 8%. So just by buying Altria here, take all the upside out of the picture here. They own a 45% stake in Kronos. They have a lot of upside potential. They could potentially get into the MJ market, but just off that dividend yield alone, you are matching average stock market return just through the dividend. So everything else then is a bonus. So some great reasons to buy Altria. Number one, here's the dark horse. They bought a 45% stake in Kronos a couple years back. It hasn't quite panned out yet, but they could potentially break into this market whenever they please. And if you look at all these other MJ companies, a lot of them are just burning through money. They're not profitable. I don't care what the stock prices are doing. Stock prices can keep going up in the short term, but they're just not sound businesses. Whereas with Altria, you're buying a sound, proven business model. They've been around for a long time. They know what they're doing. Now, it costs pennies to produce a pack of cigarettes, and then they sell them for maybe, depending on what state you're in, between $5 and $11, let's just say. That gives them incredible pricing power. On top of this, governments are dependent on the tax revenue. They get a ton of tax revenue from the sale of cigarettes. These days, government is definitely looking to collect as much tax revenue as they can, so the sale of cigarettes is not going anywhere. Because of the laws that ban, ads and marketing of cigarettes, it means that there's no new competition that can enter this marketplace. So Altria has a barrier to entry in that sense. They're a dominant player in the market, and they're not going anywhere. Now, they sell all forms of tobacco. I already mentioned they have a major stake in the Kronos, which is a cannabis company. And they also have beer and wine distribution segment, which is a very small portion of their revenue, but it's still worth mentioning. So they're well diversified in that regard. Now, these days, when we have this market where you can seemingly throw a bunch of stocks up on a board and throw darts at it, and chances are whatever company you buy, you're going to make money. This is a good and bad thing. And while that's great, it's also a sign of, maybe we're in bubble territory. But I was just reading this book the other day called 48 Laws of Power by Robert Greene. Great book. And one of the things he says is, nothing should catch you by surprise because you are constantly imagining problems before they arise. I'm all for buying high growth companies, but at the end of the day, it's all based on future potential, and it could very well go south at any given day. So if you only own these types of companies, you are at very high risk. Whereas when you start adding companies like Altria and diversifying, these are things that will help hold up your portfolio, give you diversity. It definitely doesn't hurt to include companies like this, even though there might not be that much growth potential. Let's just take the whole Kronos, cannabis potential out of the picture for a minute. If we just look at the company as it stands today, at worst, you're going to make 8% yield every year. You're going to make an 8% return. So it can help stabilize your portfolio. It seemed that money was starting to move slightly away from tech and back into these other sectors that have been very beat up. There aren't that many sales left to be had. Tech is so astronomically high right now. Any tech company is way overvalued for the most part. That being said, I think they're going to continue to do well. But you look at, REITs, banks, these sin stock type companies, that's where all the value plays are at right now. And when you think about the effects of the pandemic, we're going to look at Altria's presentation in a minute, and you'll see smoking has actually increased, which I think is, a no-brainer. People are more stressed out. They're stuck at home. There's so much uncertainty. They're going to be smoking and drinking more. That's just the way it is. So the whole idea that smoking is, just going to go away and no one's going to buy, cigarettes anymore is just not true. Now, as you can see here, Altria's PE ratio is only 9.38 as of January 15. That's an incredibly low PE ratio. So you could make the argument that Altria is an incredible value play right now, and you're getting in at a very cheap price, and you're able to lock in an over 8% starting dividend yield. So we take a quick look at Altria's third quarter 2020 earnings. You see that, as I said before, they did very well. They had strong tobacco performance. It was up over 9% year over year, which obviously this had a lot to do with the pandemic and all this added stress. Their adjusted diluted earnings per share was up 5.6%. So, it's not 50% growth. You're not going to get immense growth with this company, but you're going to get slow and steady, hopefully a stable dividend paying company with some potential upside. Their smokable product segment was up almost 10% year over year, from Q3 2019 to Q3 2020. Now they own all types of tobacco products. You can see their portfolio here. Now Altria also has a 10% stake in Anheuser-Busch, and they have a wine and beer distribution network. So this all just strengthens the company. They're well diversified. They have a well-diversified portfolio. So our balance sheet remains strong, and our core tobacco business are highly cash generative. At the time of the Q3 earnings, their dividend yield was actually even higher, 9.3%. Dividends remain our primary vehicle for returning cash to shareholders, and they approximately have a payout ratio of 80% right now, which is pretty high, but it does have a margin of safety there. Obviously, they can't afford to grow it too much more. As you can see, if we look at their revenue, it's up a good amount year over year. Obviously, I'm not expecting monumental growth with a company like this. And as you can see, a lot of that revenue translates to profit because it's a highly profitable business. They have a free cash flow of over $8 billion. Altria, I'm not expecting huge growth. The whole Kronos stake and the whole cannabis market potential, that's all dark horse. I'm not even really, putting that in my equation when looking at this company. It's just a bonus. The most attractive parts about this business is it's a proven, time-tested business model. It works. This company has 12 years of consecutive dividend increases. So you're going to keep getting more money annually just to park your money here. Looking at some, potential upside here, as I was saying earlier, pre-pandemic, it was trading at $50. So you still have 20% upside at the bare minimum. It's a well-diversified company. They have a diversified portfolio of tobacco products. They have a 10% stake in Anheuser-Busch. They have a small exposure to, wine and beer. They have a stake in Juul. They have a stake in Kronos. So let me know what you think of this company in the comments below. If you enjoyed the video, don't forget to give me a thumbs up and subscribe for more. And let me know what you think of Altria. Are you buying or not? This is Vinny from the Investment Club, and I'll see you next time.